Bitcoin has just shattered the $111,000 mark, officially launching us into uncharted territory. This historic breakout is turning heads across the financial world, signaling one of the strongest upward moves in crypto history. While gold was the first to surge, Bitcoin is now taking the lead, sparking conversations about a potential new bull cycle. The question on everyone's mind: is this just the beginning? With momentum building rapidly, a price target of $150,000 might be much closer than most people think. In this video, I'll break down exactly what triggered this explosive move, what we can expect in the coming weeks, and how you can position yourself strategically before the next major leg up. Don't miss this. Everything is about to change, and you'll want to be ready. Bitcoin has officially broken through its previous all-time high, marking a historic moment in the world of finance. We're now sitting at over $111,000, and what makes this milestone even more significant is the absence of any major resistance ahead. This isn't just a symbolic number, it's a signal that the market is entering a new phase of growth. The rally we're witnessing isn't merely driven by hype or retail speculation. It's being fueled by powerful forces, including a surge of institutional investment, massive inflows into Bitcoin ETFs, and broader global economic shifts. As inflation begins to cool and macroeconomic conditions shift, the Federal Reserve is increasingly expected to cut interest rates in the near future. This more accommodative monetary policy is prompting investors to seek out alternative stores of value, and Bitcoin is quickly becoming one of the top choices. It's clear that investors are no longer viewing crypto as a fringe asset. They're hedging against uncertainty by moving into digital assets like Bitcoin. This momentum shows no signs of slowing down, and we may be witnessing the start of a new financial era. Just weeks ago, gold broke out to a new all-time high, sending a powerful signal to the markets. Investor demand for hard assets is surging. That move wasn't just a coincidence, it was the warning shot, a clear indication that something bigger was on the horizon. Gold's breakout served as the prelude, the opening act in a larger shift toward assets that can preserve value in uncertain times. And now, Bitcoin has stepped into the spotlight as the main event. Why is this happening? Because in a world increasingly defined by economic instability, geopolitical tension, and fading trust in traditional financial systems, investors are turning to decentralized, limited supply assets. These assets offer protection, independence, and scarcity, qualities that fiat currencies and centralized institutions can't guarantee. Bitcoin embodies all of that and more. It is the apex of this new financial narrative. While gold paved the way by reminding investors of the value of scarcity, Bitcoin is now taking that momentum to an entirely new level. In essence, gold walked so Bitcoin could fly. So, the big question on everyone's mind right now is a $150,000 Bitcoin realistic? According to many top analysts and market experts, the answer is a confident yes, and there are several compelling reasons why. First, the technical momentum is at full throttle. Bitcoin has not only broken past its previous all-time high but is doing so with strong volume and sustained bullish pressure. This kind of price action often leads to rapid continuation, especially when there's little resistance ahead. Second, on-chain data reveals that whales, large institutional and high-net-worth investors, are accumulating, not selling. This behavior signals strong conviction in further upside. When the biggest players in the market are quietly building positions instead of exiting, it's a bullish sign of what's to come. Third, retail FOMO hasn't even kicked in yet. We've yet to see the wave of mainstream retail investors rushing in, which typically happens later in the cycle and can accelerate gains dramatically. If Bitcoin can maintain a price above $110,000 in the short term, a move to $120,000 could follow quickly, and from there, the $150,000 mark becomes a very real and achievable short-term target. But it's important to note that this next phase of the market likely won't be about Bitcoin alone. The altcoin market is starting to wake up, and as Bitcoin stabilizes at new highs, we could see significant capital rotation into altcoins. This could mark the beginning of a broader crypto bull cycle, one that brings massive opportunities across the board. As Bitcoin continues its powerful surge, many altcoins are still lagging behind, but that gap won't last for long. In fact, This is often the phase where smart and strategic traders begin to position themselves for the next wave of serious gains. History has shown that after a major Bitcoin breakout, altcoins tend to follow, often with explosive upside potential. Take a look at major players like Ethereum, Solana, and Avalanche. These top-tier altcoins are currently coiling up, consolidating, and building momentum beneath the surface. They're not being left behind, they're simply preparing for their own breakout moves. Once Bitcoin begins to stabilize at higher levels, a capital rotation is likely to take place. The pattern is familiar. First, money flows into high-cap altcoins like ETH and SOL, and then it cascades down into the mid and small-cap projects, sparking what's known as alt season. So if you missed the initial breakout in Bitcoin, don't panic. Alt season could be your second chance to catch a major run. But timing is critical. The key is to position yourself early, before the breakout hits, because once the momentum shifts, things tend to move fast. Now is the time to get your game plan ready. Here's what you need to do right now to navigate this exciting but volatile market environment. First, if you're already sitting on profits, it's wise to secure some of those gains, but avoid exiting your positions entirely. Taking partial profits helps protect your capital while keeping you exposed to further upside potential. Second, resist the urge to panic buy during short-term dips or volatility. Instead, wait for clear consolidation signals before jumping back in. This approach helps you avoid costly mistakes and buy at better levels. It's also crucial to keep a close eye on the macroeconomic calendar. Any signs of interest rate cuts or weaker than expected job data could act as a catalyst, adding more fuel to Bitcoin's rally and driving prices even higher. At the same time, consider diversifying into strong altcoins, especially those showing positive momentum in on-chain data. This diversification can help you capture gains across the broader crypto market, not just Bitcoin. Remember, we're still in the early innings of what could be a parabolic phase in this bull cycle. This means the potential rewards are enormous, but so are the risks. Don't let fear, uncertainty, and doubt, often called FUD, or greed cloud your judgment and wreck your hard-earned gains. Stay disciplined, stay informed, and be ready to act smartly as the market unfolds. We've waited months, even years, for this moment. Bitcoin above $111,000 isn't just a number, it's a signal. Crypto is back, and this time it's institutional grade. Let me know in the comments, do you think we'll hit $150,000 or higher before the end of the year? Smash that like button, subscribe, and turn on the bell, because I'll be covering every move, every altcoin wave, and every new opportunity in this insane bull market. Stay smart, stay early, and stay ahead.